As you know, there are different things that you can analyze in your income statement and balance sheet. So the first statement that we should analyze is your income statement. Okay, so income statement, the ultimate amount that you have to derive is profit. So when you analyze your income statement, you will analyze the profitability of the business. Okay, so what is profitability? As you know, income statement is made up of income and expenses. So you just have to know whether you have income that is high enough to cover the expense or not. Okay, in order for you to find the profit for the year or loss for the year. So means in a business you want to keep the income as high as possible and the expense as low as possible so that your profitability can be high. You would expect your profit to always be high, but have you ever thought of why you want your profit to be so high? First of all, is because if you are making a loss, you will not be able to continue business. So because of this COVID-19 situation, the bars, pubs, cinema, entertainment all shut down. Okay, even our tuition center has to close, but we still continue operations so that we can keep our profitability high. Okay, so that is the first point, to continue operation. And then the second point is to better be able to distribute profits to owners. Okay, so after we earn profits, we will split the profit between me and Mr. Cheok. Next is if we want to attract investors, if we want to expand our business, we have to do well in terms of profitability. If not, nobody will want to invest in our business if they see that we will not do well in short term or long term. Okay, and lastly, if we employ any teachers, they also want to work in a company that is able to offer them a good salary. Yes, so those are the reasons why you should keep a business as profitable as possible. There are a few profitability ratio that you should learn to analyze your income statement. The first one is markup on cost. It's most commonly known as markup on cost, otherwise known as gross profit on cost. The formula is gross profit over cost of sales times 100. You must remember to times 100 because you want to express it in terms of percentage. Okay, just now already explained the limited usage of absolute figures, so that's why you have to times 100. Okay, let me explain why the formula is gross profit over cost of sales. We can take an example from 7-Eleven. You go to 7-Eleven to buy a bottle of green tea which costs $2. Okay, so the selling price of the green tea is $2. But how much do you think is the cost price that 7-Eleven buy from its supplier? Usually it will be quite cheap. Will be maybe around 20 cents. So if this is the cost price, do you agree that this is the cost of sales? And then the top part, to make it $2, this part will be $1.80. So this is the markup. And then do you agree that this is the gross profit? So that's why the formula is gross profit over cost of sales times 100. And then you will get the gross profit, the markup on cost. Okay, so if you refer to my notes, here it says that you will earn higher sales revenue for a higher markup. Okay, and then, but you have to think, if you mark up your gross profit too high, your selling price will then become even higher, and then that may turn customers away, which may not be a good thing, right? And then that will also reduce your sales volume because nobody come and buy from you. The next profitability ratio that you will learn is gross profit margin, otherwise known as gross profit on sales, but usually you will see gross profit margin. Okay, the formula of this gross profit margin, right, is similar to net profit margin or profit margin. Okay, so both of them, how are they similar, is that the denominator is net sales revenue, same for gross profit margin. The denominator is net sales revenue. And then because you are doing gross profit margin, your numerator will be gross profit. And then for profit margin, because you are looking for profit margin, you will take profit for the year over net sales revenue. And then same thing, you have to express in terms of 100. Here, you have to express in terms of percentage, so you have to times 100. So this is how you can remember the three formulas: markup on cost, gross profit margin, and profit margin. So for gross profit margin, it just represents how well you earn gross profit. Okay, how well you keep your cost price low and selling price high, and yet not compromise the quality of the goods because you keep your cost price low, and not compromise your sales volume because you sell at a high price. Okay, so for gross profit margin, you want to keep your sales revenue high, as high as possible, and cost of sales is an expense, so you want to keep it as low as possible so that your gross profit can be as high as possible. Okay, so as long as your gross profit margin can be high, it means you are efficient in producing your gross profit. As stated here, these are some of the ways to help you to improve gross profit margin. Okay, because to analyze your business, you cannot just calculate the numbers, calculate the percentages, and then stop there. If you know that your numbers are low, you have to think of how you can improve. So one, because like I said, you want to increase your sales revenue, right? So how to increase your sales revenue? You can increase your selling price. Or you can reduce cost of sales. So how to reduce cost of sales is because if you buy in bulk, you can enjoy trade discount. If not, you can find a supplier who can supply at lower cost without compromising the quality of the goods. Actually, all these I already mentioned just now, so it's quite repetitive. Okay, so just now we already know that from your income statement, your trading portion, you have your sales revenue, you can less cost of sales, then you get gross profit. Okay, then that's your analysis for gross profit margin. And the next portion, you must remember to add your other income and less your expenses in order for you to find your profit for the year. So again, what is profit margin? It is just how well you can earn your income to cover your expenses to make your profitability high. Okay, I repeat again, how well you can earn your income, so you want to keep your income high or your gross profit high also. So both of these is high, must be high enough to cover the expense, so you must keep your expense as low as possible so that your profit margin can be as high as possible. Okay, so once again, I have mentioned this before, so it's just like that. So here are the ways to help you to improve your profit margin. First is to increase the gross profit here, or increase other income. If not, you will want to reduce your expenses. Examples of expenses that you can reduce is the cost of manpower, which is salary expense. Okay, so if you take an example from the COVID-19 situation, you see many shops are closing earlier now. It's because there's not many customers, so the employees don't have to work so long. So what the business can do is to ask them to work shorter hours, and because of this, they can pay lesser salary expense. If not, if the space is too huge for them, they can downsize and rent a smaller space to reduce the rental expense. Okay, last two. So next is percentage of expense to net sales revenue. The name already tells you the formula: expenses over net sales revenue times 100% to find the percentage. Okay, that's the formula. So actually this is just to measure how much expense that you have incurred. Okay, so you just want to keep these expenses as low as possible so that your income that you have kept as high as possible can help you to cover your expenses, and you can earn a high profit, which will become a high profit margin. Okay, down to the last one, return on equity. This just measures the returns that shareholders can get from investing in your business. So again, if this percentage is high, means it's good. If it's low, means it's bad. Okay, so from the notes here, you can see with a high ROE, owners or shareholders can expect higher returns. Okay, so this is one thing that potential shareholders will look at before they decide to invest in your business. Okay, the second most important thing is the profit margin and the gross profit margin. And how you want to increase this is because you see your profit is the numerator, so you want to keep profit high and equity low so that your ROE can be high.